All right, welcome to the deep dive. Today we are going deep on something you all know I've been following super closely, the impacts of Trump's tariffs. I'm really glad you sent in such a great selection of material for us to look at. We have in-depth news reports, we have really interesting economic analyses, and we have some revealing market data. I think the goal is to cut through some of the complexity here and extract the insights that you need to know to understand what's going on.
Yeah, you've really given us a really interesting range of sources to analyze, and what we're going to do is synthesize them to understand the real-world consequences and the broader implications of the tariffs, not just in the U.S., but globally.
Sounds great. So let's unpack this. Let's start with the immediate impacts on different sectors in the U.S. What did we see right away?
Well, I think one of the sectors that immediately comes to mind is the automotive industry, which has an intricate North American supply chain. Tariffs on parts and vehicles really put a strain on manufacturers like Ford and GM.
I know from the reports, even increased costs for just basic parts sourced from Canada and Mexico had a direct impact on their production costs and, started raising concerns about their profitability and their ability to compete.
Yeah, and it's not as simple as, just pivoting to domestic suppliers.
Right. So a lot of complex challenges there. What about the pharmaceutical and medical device industry? It's obviously a really vital sector. What happened there?
Well, they faced a potential double whammy. On one hand, tariffs on imported materials used in manufacturing could translate to higher prices for consumers. And on the other hand, for companies that are heavily reliant on U.S. sales, there is the prospect of decreased export demand because other countries might retaliate with their own tariffs.
Right. It's kind of like a 1-2 punch. It hits us at home and it hits American companies' ability to sell abroad.
What about those everyday things that we all buy? Consumer goods, electronics, clothing, household items, all of that. What happened in those areas? Well, this is an area, I think, where a lot of consumers would have felt a more direct impact. Retailers like Walmart and Target faced increased costs due to tariffs on electronics, apparel, and various household goods, and a lot of times those costs would be passed on to consumers.
Right. It's like this invisible kind of surcharge, right, on everyday items that maybe we didn't even realize. So what about the industries that are more focused on raw materials and manufacturing inputs? Textiles, basic materials, things like that.
Yeah, so for textiles and apparel, higher tariffs imposed by the U.S. meant decreased demand from American buyers, which naturally resulted in lower export volumes for countries selling these goods to the U.S. In basic materials and industrials, you have companies facing increased costs for things like metals and lumber. And this is coming at a time when you have a slowing global economy, so it's really adding pressure to those industries.
Yeah, really kind of a tough combination for them to navigate. What about the energy sector, particularly considering our close relationship with Canada and Mexico in this space?
The energy sector also faced disruptions. Oil refiners, for example, rely on crude oil and other inputs from Canada and Mexico, and the tariffs forced some supply chain adjustments and increased operational costs.
Right. And so all of this kind of flows downstream and can potentially hit consumers, like at the gas pump.
Absolutely.
Even the green energy transition wasn't immune to these pressures.
No, not at all. The green energy sector relies on imported components from countries like Canada and Mexico for solar panels, wind turbines, things like that. The tariffs could result in higher production costs, which could complicate the transition to sustainable energy sources.
Okay, so we've seen this wide range of impacts, really highlighting the kind of domino effect of these policies. Let's shift gears a little bit and talk about what happened on the global stage. You mentioned earlier that we saw some divergence in stock market performance. So what was happening in Europe and Asia?
It's really interesting that during the time these tariffs were being implemented, European and Asian stock markets were generally outperforming U.S. stocks.
Wow, that is a really interesting contrast.
Yeah, so if you look at the STOXX X600 index, which tracks a broad range of European companies, it actually appreciated while the S&P 500 in the U.S. declined. And Germany's main index, the DAX, even showed a notable rise. It seems investors were pretty resilient despite all the uncertainty around trade.
That's really interesting. So even with the looming threat of U.S. tariffs on European cars, there was this sense of resilience.
Yes, there were definitely concerns, particularly in the automotive sector, about potential tariffs on European car imports. However, some analysts felt that the negative sentiment was perhaps a little overblown and that there might actually be some undervalued opportunities there.
Okay, so that's Europe. What about Asia? It seems like the picture there was similarly positive.
In Asia, you saw markets like Japan's Nikkei and South Korea's KOSPI trending upwards. Some of this was due to positive spillover from Wall Street, but there was also growing anticipation that the U.S. might be moving towards a more targeted or nuanced approach with the tariffs.
So the possibility of a softer stance on tariffs kind of boosted investor confidence in those markets.
Yes, exactly. And we also saw increased investment flowing into Asian markets, especially sectors that stand to benefit if trade relations with China improve. There were also some government stimulus measures helping to boost growth in the region.
Makes sense. So kind of a mix of factors driving that performance. So with all these global shifts happening, how did the U.S. market react?
Well, more recently, we did see a rally in U.S. stocks, particularly in the S&P 500, driven by optimism about more targeted tariff measures. But overall, I think there's still an underlying sense of caution. The uncertainty around future trade policy continues to be a major factor for investors.
Okay, so there's still a lot of wait and see.
Exactly.
Okay, so we've looked at the sectors in the U.S. facing challenges, and we've talked about this interesting outperformance in European and Asian markets. Now, let's talk about the core arguments against these tariffs. What are the main criticisms being leveled?
If you look at the general economic consensus, one of the primary arguments against tariffs is that they are inherently inefficient. The concern is that they lead to higher prices for consumers, and they actually can act as a drag on economic growth. And historical evidence really does suggest this. Trade barriers tend to result in increased costs, lower incomes, lower employment, and decreased overall economic output.
And you mentioned earlier a really striking statistic about the impact on jobs, particularly in the steel industry. Can you remind us about that?
Yes, the data shows that there are actually significantly more jobs in industries that use steel, like automobile manufacturing, construction, appliances, than there are in the steel production industry itself.
Oh, that's a really good point.
Yeah, so tariffs meant to protect a relatively small number of steel producers could actually end up leading to job losses in these much larger steel-consuming sectors.
That's a really important point to consider, the interconnectedness there, right?
Exactly.
And the impact on consumer wallets seems to be another big concern. Can you expand on that?
Yeah, the argument here is that tariffs are basically a tax that's ultimately paid by consumers and businesses. So these added costs on imports just flow through the system and result in higher prices for a wide range of everyday items. And that, of course, can reduce purchasing power and lead to lower consumer spending.
It's kind of like death by a thousand cuts. Every little thing is a little bit more expensive.
Exactly. And there was a lot of concern specifically about grocery prices increasing due to tariffs on goods from Canada and Mexico.
Oh, right. So it's not just luxury goods, it's those everyday staples as well. So do these tariffs even do what they were supposed to do? Do they actually shrink trade deficits?
That's a good question. And the economic analysis suggests that it's debatable how effective they are at actually reducing the overall trade deficit. While tariffs might lead to a decrease in imports of particular goods, they can also lead to retaliatory tariffs from other countries, which then decreases U.S. exports. So the net effect on the overall trade balance might not actually be that significant.
Oh, that makes sense. So it's not as straightforward as it might seem at first glance. Were there any legal challenges or political arguments against the tariffs highlighted in the material you reviewed?
Yeah, there were some significant legal concerns raised. Some argue that the use of the International Emergency Economic Powers Act, or IEEPA, to impose these tariffs was not really justified. This act gives the president broad authority during national emergencies, but some argued that there wasn't a clear enough emergency to warrant these tariffs, and that there wasn't clear authorization from Congress. The major questions doctrine in administrative law also comes into play here. The idea that decisions with huge economic and political impact need clear authorization from Congress. Politically, there were concerns about voter dissatisfaction, especially with inflation already being a worry due to rising prices and potential economic instability. And the stock market volatility that we saw right after the tariffs were announced also added to these concerns. Okay, so a whole bunch of arguments against the tariffs, ranging from economic, legal, political. It's really multifaceted. So shifting gears a little bit, I'm curious, were there any countries that actually benefited from these global trade realignments?
Yeah, it's interesting because while there was widespread disruption caused by the tariffs, some countries actually saw unexpected gains.
Who came out ahead? Who were the winners in this situation?
Mexico, for one, saw an increase in their exports to the U.S., particularly in manufacturing. Things like automotive parts, electronics, those saw a boost. This was mainly due to U.S. companies looking to diversify their supply chains away from China after the U.S. imposed tariffs on Chinese goods. Mexico is in a good position to benefit because of their close proximity and existing trade agreements with the U.S.
Makes sense. So Mexico was able to capitalize on this shift away from China. Who else?
Vietnam also saw a significant increase in exports to the U.S., particularly textiles, footwear, electronics. You saw companies relocating their production from China to Vietnam to get around those U.S. tariffs. Wow, so Vietnam kind of stepped into the void there and became a new manufacturing hub. What about other players?
Taiwan and South Korea also benefited. They both saw increases in exports of tech components to the U.S., again, benefiting from the trade diversion away from China. Taiwan, especially, with their strong semiconductor industry, was really well positioned to take advantage of this.
It seems like countries with established manufacturing or tech sectors were the ones that were able to seize those opportunities. What about the European Union? Did they see any positive impact?
The EU saw some gains in certain sectors, like machinery and chemicals, where the U.S.-China trade tensions opened up some market share for them. But these gains were uneven across the different EU countries and industries, and they were partly offset by retaliatory tariffs that the U.S. put on some European goods. So it was kind of a mixed bag for the EU, with both opportunities and challenges.
Okay, so a mixed bag for the EU, but some clear winners elsewhere. Let's zoom out now and look at the bigger picture. What were the overarching impacts of these tariffs on investor sentiment and the global economy?
I think the biggest takeaway is that these tariffs introduced a lot of uncertainty and caution for investors worldwide.
Yeah, it's hard to plan for the future when you don't know what the trade rules are going to be.
Exactly. And as we discussed, export-oriented industries like pharmaceuticals and automotive face a lot of potential challenges in this environment. And we saw a more subdued outlook for global economic growth because of these trade policies.
Right. And you mentioned earlier that some fund managers were actually shifting their focus away from the U.S. and looking towards Europe and Asia.
Yeah, we thought some investors reallocating their portfolios, looking for potentially more stable or attractive opportunities in markets that seemed less exposed to the direct impact of these trade tensions. There were also some downgrades in economic growth forecasts for the U.S., partly due to the expected inflation from the tariffs.
That makes sense. And this wasn't just limited to developed economies, right? Emerging markets felt the pressure too.
Absolutely. Investor sentiment towards emerging markets definitely became more cautious, reflecting concerns about geopolitical risks and trade disputes. We saw capital flight from some emerging economies. For instance, India was mentioned in some reports as experiencing significant capital outflows.
So it really created ripples throughout the entire global financial system, driven by this kind of pervasive sense of uncertainty.
Exactly. The global economy is so interconnected that what happens in one major economy, especially in terms of trade policy, can have far-reaching consequences.
Okay, so we've covered a lot of ground here. We looked at the sectors in the U.S. that were most impacted. We talked about the surprising resilience of European and Asian markets. We discussed the main arguments against the tariffs, the countries that benefited, and the broader impact on investor sentiment and the global economic outlook. To sum it up, it seems like these tariffs really set off a chain reaction of unintended consequences, with impacts felt far and wide.
Exactly. We've seen how these tariffs impacted specific sectors in the U.S., how they reshaped global trade patterns, and how they contributed to uncertainty in financial markets. And the strong arguments against these tariffs really raise questions about their effectiveness and legality.
And our goal with this deep dive, as always, has been to take all of this information and distill it down into something that's clear and understandable.
Exactly. We've tried to give you the key insights so you can grasp the core issues without getting bogged down in all the details.
So as you think about all these different impacts and the arguments we've discussed, what strikes you as the most significant long-term consequence of these tariffs, both for the global economy and for you as an individual consumer? And what questions does this deep dive raise for you about the future of international trade and economic policy in this increasingly interconnected world? Lots to think about. Thanks for joining us on this deep dive.